Buried inside Microsoft's terms of service, the document nobody reads is a sentence that should be making headlines. And it's about Copilot, the AI product Microsoft has staked its entire future on. The document states Copilot is for entertainment purposes only. It can make mistakes and it may not work as intended, so don't rely on Copilot for important advice. Use Copilot at your own risk. So Microsoft spent 80 billion dollars building the infrastructure for a product their own legal team won't stand behind. And the numbers behind that product tell you exactly why. In January 2025, Microsoft announced it would spend $80 billion on AI data centers in a single fiscal year. Not over a decade, we are talking about 1 year. That is more than the GDP of most countries. The plan was quite simple: build the infrastructure, ship Copilot into every Microsoft 365 account on Earth, and collect the whole revenue from 450 million existing customers upgrading to AI. That was the plan, but here is what happened instead. Microsoft has had 2 years to sell Copilot to its existing customers base. We are talking about 450 million people already that pay for Microsoft 365. Every single one of them had access to Copilot Chat. Microsoft just needed them to upgrade. After 2 years, only 15 million of them paid for it. Out of 450 million customers who already trusted Microsoft enough to pay for Office, Teams, and Outlook, we are talking about 96.7% looked at Copilot and said absolutely no. And it gets worse when you look at what happened to the people who actually tried it. 70% of users initially preferred Copilot when surveyed before using the alternatives. Then they used ChatGPT, Gemini, and after actually comparing them, only 8% kept choosing Copilot. The product is losing users faster than it is gaining them. Copilot's US market share fell 18.8% in July 2025 to 11.5% in January 2026. It is a roughly 39% collapse in 6 months. 44% of people who tried Copilot and stopped using it gave them the same reason: they don't trust the answers, which bring us back to that terms of service. Here is something that should concern every investor holding Microsoft stock right now. 1 year ago, Microsoft was disclosing its AI revenue figures every quarter. The last number they publicly shared was a $13 billion annual run rate disclosed in January 2025. Then they stopped. The metric quietly disappeared from every subsequent earnings call. No explanation, no replacement figure, just completely gone. What Microsoft did report was spending 37.5 billion in capital expenditures in a single quarter, a 66% increase from the previous year. In February 2025, 1 month after announcing the 80 billion data center plan, Microsoft quietly canceled leases on approximately 200 megawatts of data center capacity across the United States. That is the equivalent of two full data centers canceled before they were even built. The reason given was facility and power delays. Analysts at TD Cowen called it what it actually was: a signal that Microsoft is resetting expectations for future AI demand. The company that announced the biggest single year infrastructure bet in tech history started pulling back before the year was out. Microsoft is not going obviously bankrupt. It is still one of the most profitable companies ever built, but there is a specific story happening inside that profit. A product with 3.3% adoption, a market share that is collapsing, a revenue metric that disappeared, and a terms of service that tells you exactly how much confidence the company has in what it built. They spent $80 billion on infrastructure for a product they are legally calling entertainment. The question now is whether the product ever catches up to it. Let me know in the comments what you think about this, and thank you so much for watching, and I will see you on the next one.